How we doing? This is Aaron Levine from LG Insurance with another episode of And Insurance, and we're here today with Lauren Flanagan from Zynergy Retirement. How are you, Lauren?
I'm great. Thanks for having me.
Awesome. So happy to have you. We've had you on the Totally Local podcast. We were at Rooney's. We had cocktails. We had food. We talked retirement, insurance, food, cocktails, and it was a heck of a lot of fun. And we'll get to cocktails after we're done shooting here today.
Sounds good.
But I wanted to bring you in and have a chat on the And Insurance podcast and kind of get into a little bit about what you do and how we work together and the synergies that we create with Zynergy Retirement. So give us a quick overview of who you are and what you do, and we'll get into a little bit about Zynergy, and we'll go from there.
All right. Sounds good. I am a senior planner at Zynergy Retirement Planning. Zynergy, I think, is a little bit different than most of the financial advising firms around here. We focused right off the bat on retirement, and then we focus on being fee only. So those are two of the big distinguishers.
What does it mean to be fee only?
Fee only means that all of our revenue comes directly from our clients. So we don't get kickbacks, no commissions, no incentives, no pressure from the higher ups to sell specific products.
Is that good, bad?
I mean, we believe in it very firmly. The thing is
from
that
a client perspective, what's the
absolutely
your business is growing, so it obviously works.
It does, and as certified financial planners, we do have a fiduciary responsibility, which means that we have to put the needs of our clients ahead of our own. And a great way to do that is when you eliminate or reduce as much as possible that conflict of interest.
Okay, so you mentioned you focus mostly on retirement planning. However, I know you work with younger people as well.
We do.
Who are in more of a growth phase, right? Building up to retirement. We just did a project with a client of yours, helped them out with some new life insurance stuff. So
that's right.
Thank you for the referral. They were great and easy to work with. So tell us how you work with retirees versus those that are more in the accumulation phase, and does it differ?
Yeah, so it definitely does. I mean, I think anyone can kind of put together a plan to accumulate assets. It becomes very tricky when we're looking to distribute. There's just so many things that go into play, little things that you wouldn't even think about, like the taxation of Social Security or the impact on Medicare premiums if we're withdrawing too much or our income is too high. So we're really putting together what we want to do is safe distribution rates and, look at the tax impact of everything as well.
So safe distribution rates. So it's not take as much money as I want to.
It's
as
not.
I need to.
No.
There's a plan in place, and you work with accountants as well with respect to doing this, right?
Right. So what happens with a financial plan is we're looking at the whole situation, and we want to look at kind of filling that gap between income and expenses.
Right.
Your whole working career, you are bringing in more than you're spending. And then when you retire, that flips. So we have to essentially create a paycheck from the investment portfolio. And we need to make sure that that investment portfolio continues to grow, especially if there is a calamity in the market. We want to make sure that we're not going to have to change the standard of living for the clients. So if we keep within safe distribution limits, that means that when there is a little bit of a correction, they don't have to pull back their spending.
So how does Zynergy think the market is today? I've got to ask. I mean, I didn't even have to tee that one up. Like, it's just an automatic. Like, hey, am I making money today? Like,
absolutely.
What are we doing?
Everyone should be making money today. If you're not making money today, there's a serious problem. But we think the market is very toppy. That valuations are out of whack. A lot of people are using the market to speculate and looking at short term, and that really goes against everything that we believe in. We believe that it's you're in it for the long term, and as long as you're investing that way, you're going to do well over time without really taking gambles.
That's a fair, safe answer, I guess.
How does
Zynergy feel about crypto?
Probably very similar to what Warren Buffett said. We don't get into it, and again, it's because it's speculative. I think the quote from the weekend with Berkshire Hathaway was, "Why would we get involved with something that facilitates kidnapping and terrorism?" I think with anything like that where there's hype, typically when you start to hear the hype, it's too late to invest in it.
Okay. Any of your client base, right? We're building assets, we're distributing wealth to live on, right, at retirement age. But there's also a piece of the plan that goes into the protection of assets.
Absolutely.
Right, and making sure that we're safely investing it, making sure that obviously that there's some insurance in place. Tell me about the conversations that you have with your clients with respect to the protection of assets, not just from the insurance perspective, but I want to know what your conversation is that eventually ties us in to help close a gap.
Right. So I will say it varies a little bit, obviously, depending on the age of our members and, their status, whether they have dependent children and things of that sort. But we're basically looking at 4 areas, which will come as no surprise to you, I'm sure. But we're looking at life insurance. We are looking at disability insurance, long-term care, and then property and casualty. So what we're looking to do with those things is really just protect income, primarily, and then also help people to meet goals. So, perhaps we're meeting with young parents who say, well, in addition to, meeting my income needs, if something happened to me, I want my child's education fully funded. So our plan is to, set up a 529 to help fund the college education, but we also want to have protections in place and maybe a little bit extra insurance to make sure that we can meet those goals.
Right. So with young families, life insurance, the disability insurance, the income protection.
Right.
We had Jason from my office was recently on the podcast, and we were talking a lot about that wealth preservation, that income protection, right?
Right.
I always say I'm more expensive disabled or unable to work than I am dead.
Yes. And it's so much more likely.
And it's so much more likely that a situation could arise where you're unable to work, where whether it's not always just an accident. It could be any kind of
illness.
Health or illness or disease that could take you out for an extended period of time. So having that paycheck protection is super important for a family, period, not just a family that's looking to start building wealth and income and saving for retirement. Protecting what you have today, especially if that's what you live on, and you don't have the extra zeros sitting in a bank account.
Right.
That disability insurance, I think, is super important. Life insurance, obviously, still very important. We want to protect our families, children, our mortgages. When somebody buys a house, they get like 1,000 letters in the mail of sign here for your mortgage protection insurance. They don't call it life insurance; they call it mortgage protection insurance, which is fine.
Last chance.
But there's definitely a way to do it better and work with professionals. And even starting at the financial planning level, working with Zynergy to build that plan, and then to know, okay, here's the protections we need to have in place. So you may be investing or saving in your 401k, your IRA, or whatever other vehicle you're working with. But then, hey, we need to take $200 a month out of that savings to then put in place for insurance. So for individuals that don't have access to a 401k plan, right? Those that own small businesses, work for themselves, are regular W-2 employees, what do you recommend as far as retirement savings for them?
So, a lot depends on the income, but in most cases, the first thing out of the door is IRA. It is incredibly powerful. And, you kind of said before about retirement being when you're closer to retirement, planning for it, but you have to start planning for it immediately because we're basically on our own at this point. Hopefully there will be Social Security benefits for people our age when we retire, but we have to, there's no pensions. That stuff is gone, unless you're in a few niche professions. So the Roth IRA, if you start contributing, it's after-tax money, so that hurts some people. But if you can kind of get over the sting of that money has tremendous potential because it grows and grows and grows without ever getting taxed again. So we're huge proponents of the Roth IRA. And then there's other ways to kind of get into a Roth in kind of a backdoor way.
Okay.
So a lot of opportunities.
Let's give me some of the skinny. Let's dish some dirt here. Let's go.
Yeah, absolutely. So we've been recommending lately, we have a lot of members who have come on. They have big incomes, but they don't have old IRAs. And when you don't have those other retirement plans, you're able to do what they call a backdoor Roth. So you would contribute to an IRA. It would not be deductible. And then by the end of the year, you convert it to a Roth IRA. It's a neat little loophole. And, I think the Roth IRA is kind of the poor man's retirement savings, and then they cap it with income eventually. This is a chance for people who haven't been able to save a ton to still take advantage of it despite the higher income levels.
So what is the income level cutoff for a Roth then?
Well, there's a range. It phases out. But somewhere around 122
Okay.
for an individual.
Got it.
So.
Got it. So tell me, so for my office, for my staff, for what we do, we use a simple
Yes.
IRA. What's the difference between a simple and, and the Roth is obviously individual,
Right.
but the simple IRA, give us a little bit about that.
Yeah, so the Simple is a great plan, and definitely awesome that you do that for your employees. Basically, the way that works is the employees would contribute and the employer contributes as well. But it's a lot simpler, and that's where the name comes from, right? But it's a lot simpler than setting up a 401k. There's a lot fewer administrative costs, but the trade-off to that is that you can't contribute as much. So there's limitations on
What's
that.
the cap on contributing to a simple IRA?
13,500.
Which is still respectable, and for any small business owner that wants to provide a benefit to their employees so that they can
Huge.
contribute. I don't know how many W-2 employees are contributing 13 or 19 or whatever the cap is for a 401k either, that are maxing that out.
I mean, the
It can't be
numbers
easy.
are startling right now at how few people are saving for retirement, and COVID certainly hurt that.
Right.
And I think more than anything, it hurt working moms. So there's just a huge need out there to start contributing and getting the word out that it's so important to
Right.
contribute, at least up to that maximum or up to the match that the employer provides.
Sure.
And then I kind of suggest, get up to the match, and if you can do a Roth on the side, do that. That's a great benefit when you have a simple IRA and then you also contribute to your Roth. You're just compounding and really setting yourself up for success.
Retiring early is not in my cards because I spend way too much money. But let's go back to a little bit of asset protection because I want to dive into it. We talked about the life insurance, the disability insurance, but you also go into property and liability as well. You have a conversation around that. Tell me about that conversation.
We do. So we do a review of all of the policies that our members have, and typically what we're looking for is, is the coverage adequate? Has there been premium creep? A lot of times premiums might creep up, and maybe you're now paying more than what is generally acceptable. And then umbrella insurance, really, that's probably the biggest hole in most of the plans we look at. And that's really where you've been a great resource to us, being able to kind of say, can you look at this for us? What's missing?
Sure.
And, can you do any better for our members? And it's been great that you've been able to do that for us.
So prices have been going up. It's no surprise.
Yes.
Prices are going up on everything
It's true.
right now. Everything's expensive. And they're going to keep getting more expensive with inflation. I think you quoted Warren Buffett. I think he was saying something about inflation the other day. He's taken the cost of steel and lumber and everything else. The trickle down is tremendous. So there's inflation across the board, and we've been in what's called a hard market for insurance since January of 2020. We had a market shift where costs have been going up. The umbrella market has increased in price and cost significantly, more on the commercial side, not
Okay.
so much on the personal side. Having a personal umbrella, the hope is that you'll never need it.
Right.
But that extra couple of $100, $1,000 a year to add those extra millions of dollars of coverage is super important. And my favorite coverage of all time ever is that uninsured, underinsured motorist
Right.
coverage, that Part B on the umbrella, which I'm a huge advocate for. It's extra money, but it's actually coverage for you, protecting you against somebody else that doesn't have enough insurance, right? So Part A of the umbrella protects other people from you. If you get into an accident and they sue you for $1 million, $5 million, $10 million, whatever it is, that Part A covers that. But if you get into an accident that's not your fault with somebody that has inadequate insurance, that
Right.
Part B protects you from them, and your insurance will actually pick up the gap where their insurance leaves off.
Yeah,
So that
that's great.
UM coverage on the auto policy and on your umbrella policy is the best coverage that I can think of.
Right. And, you said
know,
it's expensive, but I think it's way more expensive not to have it.
I'd rather protect myself. I'd rather be protected from somebody else. And, because we know there's a lot of somebody else's out there that don't carry enough
Absolutely.
insurance should a situation arise and you're left holding the bag. And that's not a lot of fun. So, I'm such a huge advocate of, hey, this is for you.
Right.
Like, this is yours, It may not be your fault, but then you have something to fall back on as opposed to, it's not going to happen to me, so I don't need to carry an umbrella because I'm not going to get into an accident. I'm not going to do something stupid. Something
Right.
stupid's not going to happen.
And
But
to your
having-
point, I think there's so many people who just don't know how much insurance is enough. And,
Right.
That's one of the big questions people come to us when we're doing a plan. Do I have enough insurance? Do I have too much insurance? Can you look at it for me, please? Am I paying too much? So we're really looking at all those things. And then we refer out the work because we're
Right.
fee only. We're not gonna book it.
And so people ask me the same question: do I have enough insurance? Do I need more umbrella? And I say, you can't ask the insurance guy if you have enough insurance.
Right.
Because I can
never
always
have enough.
I can always sell you more. But if we can go off the record, there's probably reasonable levels for people to carry, different levels of liability and umbrella and property coverage, within reason. And I'm a
Right.
reasonable guy. But professionally, if I were to recommend something too low and a situation arise where,
Right.
Another $1 million gets tacked on, they're like, you told me I didn't need it.
Right, exactly.
You always need it. I can always sell you more.
That's right. We always have to say, you have to understand that there's always a risk.
Right.
And that we have to manage that risk.
There's always a risk. So tell me a little bit more about the firm, and then we'll let you go.
Okay, great.
Zynergy Retirement on Instagram at Zynergy Retirement.
Yes.
Super easy. Follow us at Luxury Group INS. Then you can find Zynergy there. I'm sure we'll be tagging a photo with Lauren in it shortly. On Facebook, and your website is what?
ZynergyRetirementPlanning.com.
ZynergyRetirementPlanning.com. Lauren Flanagan, senior partner.
Senior planner, but also a partner.
You're
with
a
the
partner
business.
also,
I
right?
am, yes.
Hi, Ryan. Nice to see you as well.
Hey, Ryan.
Much happier having Lauren here. Anyway, any other questions or thoughts before we wrap it up?
No, I guess the big thing would be for anyone listening, it's never too early to get started planning. And one of the things that I love about Zynergy and the way we set it up, Ryan had come to me before I even started working with him, and we had shared this passion for helping people. And he knew that was what drove me, and he invited me to come on board when he was ready to hire someone. And we formed the whole business based on that shared passion for helping people. So what's unique, I think, about Zynergy is that we'll help people at every level. We're not going to be the type of person who you're going to call, well, you don't have enough money. We don't even ask. When you call us, we're not asking you how much money you have. It would be disingenuous to say we want to help people achieve financial freedom and then say, sorry, you don't have enough money. So that should never be a holdup when,
We like
when you're
big bank
looking for
accounts
help.
also. So,
Yeah.
those help
Emergency
offset
savings.
Those help offset the additional costs for those that are really working to get started.
Absolutely.
So awesome. Well, thanks for hanging with
Thank
us
you so
today.
much.